Is Bitcoin really the safe haven asset everyone claims it is? Today, we're going to shatter that myth. I'll show you 9 specific scenarios, from all-out war to technological collapse, that could send Bitcoin's price plummeting, but I'll also reveal which of these disasters could, paradoxically, be the best thing to ever happen to it. We're talking about everything from a Chinese invasion of Taiwan to a global internet blackout, and what that really means for your money. Stick around because the answer isn't what you think. Let's start with the big one, war. Many believe Bitcoin is a war hedge, but the data says otherwise. In moments of extreme instability, like a full-scale conflict, people don't rush to crypto. They rush to cash, to gold. Bitcoin, like stocks, takes a massive hit. Think about a regional nuclear conflict or a Chinese invasion of Taiwan. The immediate effect would be panic, a massive sell-off, and a deep drop in price. The infrastructure supporting Bitcoin could even be compromised. But here's the twist. In the long run, if a conflict erodes trust in the US dollar or leads to massive money printing and capital controls, Bitcoin could emerge as a powerful alternative. It's a long-term bullish case born from short-term chaos. Next, a global financial crisis. Initially, Bitcoin would fall hard, just like the S&P 500. When panic hits, liquidity is king, and people sell everything. But once the dust settles and central banks start printing money again, Bitcoin could rebound stronger than ever, positioning itself as a true digital gold. Then there are the scarier scenarios. A technological collapse, like a widespread internet or power grid failure, is a systemic threat. If the network goes down, Bitcoin is effectively useless. This is a true black swan event that would cause an immediate and catastrophic price crash. Similarly, a coordinated global ban on cryptocurrencies would trigger a massive sell-off, but it could also force the network to become even more decentralized and resilient, an interesting long-term outcome. Finally, there's hyperinflation. In economies where the local currency is collapsing, we've already seen Bitcoin become a digital refuge. Its peer-to-peer usage soars. This is the one scenario where Bitcoin's value proposition shines brightest in the short term. Navigating these risks requires a clear head and a solid strategy. If you want to stay ahead of these complex market shifts, take a moment to subscribe to the channel. It's the best way to support this content. Now, let's look at the broader market, because the risks aren't just in crypto. The US government is on the verge of a shutdown. Historically, shutdowns have often been surprisingly positive for the S&P 500. But right now, banking stocks like JP Morgan, Wells Fargo, and Goldman Sachs are feeling the pressure. Meanwhile, Warren Buffett is making moves. There's chatter that he might acquire the petrochemical business of Occidental Petroleum. I find Occidental's position very interesting right now. A key lesson here is to consider buying solid cyclical companies when they are down, and this is a prime example. Let's talk AI. The race is heating up. OpenAI is reportedly partnering with Samsung and SK Hynix to build a massive AI supercomputer called Stargate. This is huge news for the entire semiconductor supply chain and reinforces why I remain incredibly bullish on Nvidia. They are the undisputed leader, and this kind of project only cements their dominance. Some other quick updates. Target stock is at a 6-year low, and rumors of a private equity buyout are swirling. This could make it an attractive acquisition target for investors looking for value. And while MicroStrategy has had a great run, I believe there is still more downside ahead for the stock. Later, I'll tell you about the single best opportunity for new investors in Spain, but first, let's talk about that opportunity. My Investor has just partnered with BlackRock to launch the cheapest index funds in Spanish history. This is not a small deal. It's a game changer for retail investors. An index fund is simply a basket of stocks that automatically tracks a market index, like the S&P 500. It's the simplest way to get broad market exposure. What My Investor and BlackRock are offering is access to funds tracking the S&P 500 for just 0.05% in fees. The MSCI World Index is at 0.06%. These are institutional prices, previously reserved for multimillionaires, now available to everyone. Why does this matter? Because fees are a silent killer of returns. A 1% difference in fees over 30 years can mean tens or even hundreds of thousands of euros less in your pocket. For new investors, the choice is simple. Go with the cheapest option. These new funds are it. So, we have a market full of contradictions. Bitcoin faces existential threats that could also be its greatest catalyst. The stock market is shrugging off a government shutdown, while specific sectors feel the pain. And massive opportunities in AI and low-cost investing are opening up right before our eyes. What is the single biggest risk you see for your portfolio right now? Let me know in the comments below. And if you got any value from this analysis, please subscribe to the channel so you don't miss the next one. Thanks for watching.